Welcome to another share market and investment update. I'm Tom Elliott and I'm speaking on behalf of Switzer Advisory. Well, the share market's been pretty strong in the past couple of months. Indeed, we've seen it break out of its range of the last couple of years of 3,900 to 4,400 points to well above 5,000 points. All looked actually very good recently until things again went awry in Europe. This time it was the island of Cyprus that provided all the excitement in the markets. The Cypriot government, faced with an urgent need for funds to bail out its banking system, proposed a confiscation of money out of people's accounts. Indeed, they were going to take 9.9% of anybody's account who had more than 100,000 euros, and for people with less than 100,000 euros they were going to take 6.7% out. The Cypriot Parliament has looked at that plan somewhat askance now and said, oh, maybe we won't do it. But unfortunately the rot has set in, because market makers and investors and commentators are all looking at it and saying, well, if the Cypriot government is prepared to confiscate people's money directly out of their bank accounts, who's to say that that idea might not spread to Spain, to Italy, to Greece, to France and beyond? I don't think it will happen, but it just shows you what a knife-edge confidence, particularly in Europe, rests on. Having said that, even though Europe remains a bit of an investment basket case, we sort of know it's a basket case, so it shouldn't have too much of an impact on our share market for too long. Although having said that, in the last week or so in March, share prices have gone downwards compared to where they were before. In the US, things are looking pretty good. The Dow Jones Index has hit a record high over the past month. That's a record high ever. So in fact, it has more than recovered all the losses made during the global financial crisis. Sadly, the Australian market is still well below where it was. Our peak of around 6,800, we are nowhere near that at the moment. Of course, the Australian share market hovering around about 5,000 points as we speak. Yield is still very much sought after by investors, and indeed in our portfolios we've seen both Commonwealth Bank and Westpac hit record highs in the past month, and of course in our main model portfolio, like many large equity portfolios around the country, the banks play a very, very prominent part. Perhaps more pleasing was to see that a laggard like National Australia Bank has also broken out of its trading range. NAB has been between $22 and $24 for quite some years now, and more recently it's risen all the way up to around $31, so that is good news. NAB used to be the biggest of the big four banks if you go back around 15 years. Now it's pretty much the smallest. That tells you it's got some catching up to do. Telstra appears to have probably levelled out after its year-long rise. We were buying Telstra shares in the mid-350 level, and the stock pleasingly has risen right up to $4.50. We've got Telstra in both our model portfolio and in our income portfolio. Telstra pays one of the best fully franked yields you can find in the Australian market. And the great thing is the Telstra board continues to commit the company to paying that 28 cents a share fully franked yield. One of the reasons though the stock has levelled out at around $4.50 is there is some residual uncertainty over what might happen after a federal government change. If Tony Abbott gets into power with the Liberal-led coalition, will that new government keep its commitment to the national broadband network? I think it will. I think the contract it has with Telstra is pretty watertight, but understandably investors probably don't want to keep pushing up Telstra's share price until they have a better idea of what's going on. Of course, we also run our takeover target portfolio that some of our investors enjoy being invested in. One of the more recent additions to that has been utility stock Envestra. Envestra is a near monopoly provider of gas pipeline transmission services to gas retailers. It has a highly regulated return, but it's an excellent return, and Envestra actually pays around 6% unfranked per annum on its share price, which is around about $1.04 at the moment. The Australian Pipeline Trust owns roughly a third of Envestra, and there's no reason why down the track Australian Pipeline Trust might not have a go at taking over the entire thing, subject of course as always to regulatory approval. Other stocks that we think have been really good and probably still have a bit further to go include Coca-Cola Amatil. We hold that in both our main portfolio and our target portfolio. Coke has committed to getting back into the beer and spirits business, which it exited as part of a deal with Foster's some years ago, and pretty much it's the only stock you can now buy in Australia of any size that has an alcohol business. Of course, Lion Nathan and Foster's went to foreign bidders over the past few years. Another one is Caltex. Caltex we hold in our takeover target portfolio. For years it's been written off as a very boring fuel refining business, but Caltex is going to shut down one of its refineries, and pretty much I think it should now be seen as more of a supermarket business. When you think about it, all those little Caltex service stations are really just mini supermarkets that happen to have petrol pumps out the front. They don't make much money on retailing the fuel, but they do make a lot of money on people walking into the little supermarket and buying a chocolate bar, a drink, a newspaper, a magazine, on the way to paying for their petrol. I think the market's starting to realise this, and the multiple at which Caltex trades is now more approaching that which Woolworths and Wesfarmers, both of which are also stocks we hold in our main portfolio. So Caltex and Coca-Cola have been excellent providers of growth in a couple of our portfolios. Anyway, it seems the market has taken a breather for the time being. I do think interest rates are very soon likely to bottom out. Whether this means the market keeps hunting for yield is difficult to say, but even if they do bottom out, I think they'll stay low for quite some time. Appreciate your company. I'm Tom Elliott, and that's been another financial market and investment update. Look forward to your company again next month.